Hi, this is Arun, lecturer in commerce from Dr. V.S. Krishna Government Degree and PG College, Visakhapatnam. Welcome to my YouTube channel, Arun's Commerce Classes Made Easy. The purpose of my YouTube channel is to create awareness among the commerce students and understand easily the various concepts in commerce and different subjects in the commerce. So kindly do subscribe my channel for further viewing of the videos which will be launching soon. Thank you.
Hello everyone, this is Dr. G. Arun Kumar, lecturer in commerce from Dr. V.S. Krishna Government Degree and PG College, Visakhapatnam. Today I'm going to discuss a very important topic in the goods and services tax, that is the availability of credit and the ITC. Now, today's session I would like to discuss a very important issues. The first would be the concept and meaning of ITC. What do you mean by ITC? Then the essential conditions for the dealers for availing the ITC. Next, we will be discussing the procedure for availing ITC, then the eligibility for availing ITC. So let's go into the further discussion. Now, as per Adam Smith, who is called a father of economics, in his book Wealth of Nations, has rightly said that the inland trade is almost perfectly free and the greater part of goods may be carried from one end of the kingdom to the other without requiring any further permits or let pass, and without being subjected to question, visit or examination from the revenue officers. So this freedom of interior commerce was called as the effect of uniformity of the system of taxation is perhaps one of the principal causes of the prosperity of Great Britain. So in the view of Adam Smith, he says that the success of Great Britain can be attributed because of the uniformity in the system of taxation. So he wanted to say that a country's economic progress, growth and development widely depends on how well your country's taxation system is. So if your taxation system is progressed, well developed, your economy will also be developed. So Narendra Modi ji, with a great vision, has started implementing the GST with the slogan "One Nation, One Tax," so that our country will be economically developed and progressing in the future. Now, let us see what is input tax before we go into what is input tax credit. Now, when you say input tax, as per section 255 under SGST and CGST Act, input tax means the IGST including the import, the CGST and SGST charged on any supply of goods or services to him. Him means a dealer, which includes the taxes payable under section 8(3). The levy of payment under reverse charge excludes the taxes paid under section 9, that is the composition levy. So apart from composition levy, whatever taxes are paid on like SGST and IGST and CGST, these are input taxes. Now, as per section 215 of the IGST Act, input tax is nothing but the IGST, the CGST and SGST which is charged on the supply of goods or services to him, which includes payable under section 5(2), and the levy of payment under reverse charge excludes this taxes paid under section 9, and also it excludes the composition levy of CGST and SGST. Now let us see what is ITC. So here ITC consists of three important words, that is input, tax and credit, right? So what is input tax credits? Input tax credit simply means the credit of input tax. When the government is giving the credit back to the taxpayers, the dealers on the inputs, it is called the credit of input tax. So input taxes are nothing but all the taxes which are paid on the business expenses that are incurred in relation to the taxable output or supply, or which means any supply of goods or services are both used, are intended to be used in the course or furtherance of business by a registered person. So all the taxes paid on personal expenses are not creditable. Only the expenses paid on the supply of goods and services which are used in the further business or course of business are only given as credit. So as per section 262 of input tax means all the taxes under CGST, SGST, UGST and IGST which are chargeable under supply of goods or services are both which are received by a registered person in the course or for the business, right? Now let us see briefly or elaborately what are the input taxes. See, I have given a small example here. For example, let us take an example of ABC garment company which manufactures the garments. So if you see here at the picture, the ABC garment is dealing in the business of retail garments. So he has to pay taxes both on the inputs which are used or bought for the business and also on the outward supply. For example, he used inputs like input, capital goods and input services. Now let us see what is the input. Like purchase of garments is itself an input, raw materials, and he has to pay input tax GST on this purchase of garments. Then he has to also pay input tax, that is the GST on capital goods. Like for example, for billing he may be using some software and he may be using some laptops or some computers. For this again he has to pay input tax GST on these capital goods. For example, laptop. Again, he will be using some charges, like when he has purchased the garments from the other factories, he has to pay the transportation charges or freight charges. That means he has to pay again GST on input services also. Right? Now, these are the examples of various input taxes which are paid on inputs, capital goods and input services. Now, what he will do after this acquiring inputs and all these services, now he will be selling the goods. Now you see here, he sold some garments. So what he has to do, when he is selling the garments to the customers, now he has to pay the output tax on the sales, or he will be charged some distribution cost. Again he has to pay output tax on GST on this distribution cost, right? Now when he is paying output tax, for example, now the output taxes are like 1,50,000, whereas the taxes which he already paid on inputs is 1 lakh. Now what is ITC? Let us see. Now whatever taxes he already paid on input will be given a credit, so that is called input tax credit. Now he need not pay 1,50,000 on the output since he has already paid 1 lakh on inputs. Now to avoid the cascading effect in GST, there is a facility called availability of ITC, that is input tax credit. Now ABC Limited can avail 1 lakh credit on the input taxes. So now from 1,50,000 the output taxes, if he deducts 1 lakh, he now has to pay only 50,000. Now this 1 lakh is called as input tax credit, right? To further explain the concept, again now let us see what is ITC. I said ITC is nothing but a combination of input plus tax plus credit. Now what is input? Any inward supply of goods and services are both. Now what is the tax? All taxes paid on purchasing these inward supplies. And what is credit? Credit is simply setting off the taxes paid on the purchase against the liability which is now raised on the sale of your output. Now this is called input tax credit, right? Now as I told you, see the capital goods. Now whatever taxes are being paid on the purchase of capital goods or use of capital goods like laptops, machinery, these will be given exception. We will be given a credit. Again, all the input services, any services which are used in the further course of business, again you will be given the input tax credit for your input services, right? And any inputs or input goods which are using in the course of business like raw materials, again you will be given a ITC, that is input tax credit. Now let us see what is this ITC and some important principles governing the ITC. Now, input tax credit is a concept which was introduced to levy tax only on value addition. See, this means in under the ITC, the final taxes will be calculated only on the value addition, not on the total value, right? Then the input tax credit, the important aspect is to reduce the cascading effect of taxes. So to avoid the unnecessary taxes, to reduce the tax burden of a dealer, this ITC has been introduced under GST. So let us see the major principles. Again, you will be given a credit ITC only if you are using in a business. So all the business expenses will be given ITC, right? And personal expenses will not be given any input tax credit. Now let us see the conditions or eligibility for availing the ITC. Now everyone cannot be avail this input tax credit. So to be availing this facility of ITC, first you should be a registered person, a registered dealer, and you should have a seamless availability of credit. I mean, you should be continuously engaged in the sales and purchase. There should be some trade, and compulsorily you should maintain a ledger called electronic credit ledger, which is very important. So if you don't maintain this electronic credit ledger, you cannot be availing this ITC, right? And no input if willful suppression of facts and fraud. So if you are willfully suppressing the facts, you will not be allowed ITC, right? Then coming to the primary conditions, there should be a compulsory tax invoices. You should maintain debit notes, and there should be a compulsory receipt of goods and services. You should have actually received it, right? And the taxes should have been paid on the inputs. And again, if you want to claim the taxes paid on the inputs, there should be returns filed. Until and unless you file the GST returns, you will not be eligible to claim this ITC, right? And what are the special scenarios? Payment should not be made within 180 days. Okay, it should be at least 180 days to avail this ITC. And capital goods, if depreciation is not claimed, and no tax such ITC will be given, and no credit will be given after the due date of filing a return following September. If the date of return is over, you can't claim the ITC for such supply or such transactions. Then now let us see what are the basic conditions for taking this credit, that is input tax credit. To claim your input tax credit under GST, as I told, you must be a tax invoice or you should have a debit note which is issued by the registered dealer, and you should only buy from a registered dealer, right? And you should have the receipt of the goods. Okay, so if you are not actually received the goods, and the goods should be received within 3 months of issue of invoice. For example, if invoice is issued in January, you should receive the goods compulsorily before April. So within the 3 months of issue of invoice, you should be in a position of receiving the goods or services, right? Then the taxes which are charged on your purchases should have been actually deposited or paid to the government by the supplier, either in cash or via claiming input credit. So until and unless you pay taxes and you deposit the taxes on input, you can't claim the ITC on the output taxes, right? And the supplier should have been actually filed the returns. See, so there are GST 1, 2, 3, 4 quarterly returns, half-yearly returns, and monthly returns. So until and unless the supplier has filed the GST returns, he cannot avail the ITC. Okay, right? Therefore, if you want to claim the input tax credit on all of your purchases, the supplier must compile or compliant with the GST rules and regulations. So if you're not having any compliance as per the GST norms, you will not be allowed to avail this ITC, that is input tax credit, right? Then so let us see the other conditions for taking this credit. So if any dealer or the registered dealer wants to avail the ITC input tax credit, you see the goods in lots or installments. Okay, so whenever you are receiving goods against a single invoice in lots or installment, you can be availing this ITC. Again, the taxable person can take credit upon the receipt of last lot or installment. For example, you are not purchasing in bulk, you are purchasing in installments. In this case, when you receive the last installment or last lot, then only you will be allowed this ITC, right? Then let us see the order of utilization of ITC. Now, how to utilize this input tax credit? So, I have shown here in the diagram the existing provisions, and I have also sharing with you the new, that is the amended provisions. So, earlier, if under CGST you can only first set off CGST, then if any balance, then you have to set off IGST. And if there is SGST, you can only set off SGST first, then IGST. And in case of IGST, you have to first set off IGST, then second CGST, then balance, if any remaining, you can set off SGST. But now there are some amendments made in the availment of or setting off the input tax credit. If you observe clearly here, you see under CGST, first you can set off IGST, then if any balance is left out, then only you can set off the CGST. If you are having SGST, you can first set off again IGST. If any balance is left, then only you can set off against the SGST. Then coming to IGST, you have to first set off IGST. If any balance is there, then secondly you can set off the CGST. Then finally, if any balance is left out, then you can set off this SGST finally, right? So this is the new order of utilization of ITC as per the amended provisions in the GST Act, right? Then let us see what is credit availment and what is credit utilization. So these are the two terminologies where students are most often confused. So let us see what is credit availment and what is credit utilization. Now, credit availment is simply means recording credit in the statutory book. So whenever you are recording the books in the electronic credit ledger, it is called credit availment. So it results in increase in the credit balance. It results in the increase in your credit balance will be increasing with the credit availment, since you are recording in the electronic credit ledger. Now, what is credit utilization? It means using the credit which is already availed or which is taken to pay output tax or other eligible sums. Okay, so when you are actually paying output tax, you can utilize credit. Now, when you are utilizing this credit, it results in a decrease in your credit balance. So it decreases your credit balance, whereas credit availment increases your credit balance. So this is the basic difference between what is credit availment and what is credit utilization, right? Now, let us see the finally the time limit for taking ITC. So when as a dealer you can avail the ITC, the time period. So you see, if you look at the diagram, my slide, ITC can be availed only within 1 year from the date of invoice. So, but there should be minimum 6 months, but maximum 1 year within the date of invoice. For example, if the invoice is raised on January, so 31st December of that year, you can avail ITC. So you can't avail ICT if it exceeds more than 12 months or a period of 1 year. The invoice issue date of invoice should not exceed more than 1 year. And September following the end of financial year. So after you have submitted your returns, then only you can avail this ITC. Now again, you can only avail the ITC if the date of filing of annual return. So if you have filed your annual return, then only you can claim the ITC. So whichever is earlier, you see, from all these three conditions, see, the first condition says 1 year from the date of invoice, or September following the end of the financial year, or the date of filing of annual return. Whichever period is earlier, which comes first, that period you can avail the ITC. So this was all about my presentation. Hope the students are able to understand now what is input tax credit and what are the conditions required for availing the input tax credit, what are the eligibilities, and I also discussed the benefits for the traders or the dealers in availing the input tax credit, and finally we have discussed the time period, which is very important, okay, for availing the ITC. Beyond this time period, you are not eligible to claim ITC. And thank you very much. And